All right, welcome back to another epic episode of the Small Axe Podcast. I am your host. I am your go-to operator. I am the guy that is here to help you out, here to help you fast track your career and your journey, here to give you what you need to become the best multifamily owner and operator and investor that you can possibly be. Today, I want to talk about why I feel it is the best buying opportunity since 2009. We all know that there are market cycles. There are up cycles and down cycles, good times and bad times. When times were bad in 2009, during the great financial crisis, it was a very good buying opportunity. Why? Well, simple. Prices dropped significantly, and people were able to capitalize on those discounts. And then we had like a 12, 13, maybe even a 15-year run up to where we hit the peak again in 2022. Now, these are just my thought processes, not necessarily any data points or any metrics that are clarifying anything. And if you do go research and look at data, it'll be about the same anyway. We hit the bottom around 2008, 9, or 10. We started climbing and getting up to around 2022 was probably the peak, maybe even 2021. It can be argued, okay? But the point is this: we had one of the longest run ups in recent history. A typical market cycle is about 5 to 7 years from top to bottom. And we went about 10 or 12 years to run up to the top. So now we're in a down cycle. It's evident. We might not be in a full recession. We might not be in a full depression, right? But we are in a down cycle. There's no doubt about it. How do I know that? Market conditions are tough today. Prices are down today. And what that means for us as buyers or potential buyers is that now it's the opportunity that we have been waiting for. When everybody was complaining in 2020 through 2022 that prices are too high and nothing's penciling, when everybody was complaining about that, wishing prices would just drop, wishing the market would stabilize itself again and normalize and things would go back to normal, well, they have. So starting in 2022, I don't know, maybe the springtime or a little bit earlier, we began to see the quickest run up in history of interest rates. Interest rates went up 5 full points, 500 basis points, which is incredible, unheard of, unprecedented. And that was likely a much needed shakeup for the market that was happening back then. Rents rose a ridiculous amount due to a number of factors from 2020 to 2022, and something needed to break. Something needed to cause a shakeup. It was an unsustainable amount of rent growth that happened in that time period and an unsustainable and unhealthy amount of price increases that happened. Now, I like to also add on to that the fact that there was an increasing number of syndication groups out there from either mentorship programs, coaching programs that had become super popular in recent years, along with the fact that people just realized they could raise capital from other people to buy deals. Now, on top of that, what was going on simultaneously was there was a lot of bridge lending happening. There were debt funds out there that were funding things with very, very cheap debt. And the idea was to refinance out of something like that. And it worked. It was working for a few years until the interest rates went up. And once those interest rates went up at an unprecedented rate, everything changed. As we know, when markets shift, it takes time. There's a lag effect for people to see or really feel the difference, for those changes to really take effect. So it doesn't instantaneously make it a buyer's market. It took a few years. And today, 2026, I feel it is almost the bottom. Now, you're never going to actually time the bottom of the market, but I know that we're close, and I feel that we have probably another 18, 24 months of pain. After that, things will start to recover, and it might be a slow recovery. Even if interest rates drop this year, which is likely, they will likely drop, maybe a little bit more. It might be kind of slow. They might come down a little bit. I don't think they're going to get down to the low threes again, but we're already in the fives. We're essentially 6% today, but just slightly lower. And we could go a little bit lower, and that's a win. We as investors need to think historically, think in decades, think over time. And if the historical average is perhaps even more than 6%, maybe we're in a good space right now. And if the rental market is normalizing again, meaning rents are flat or even declining in many markets, and it's very localized, I understand that. But if we can understand that rents are basically flat, historical interest rates are at their average, then what do we need to do today as buyers to capitalize on this and to ensure success for ourselves, our investors, and our portfolios? All we need to do today is purchase properties that make sense based on our underwriting, based on our knowledge, our experience of how we understand properties operate, based on today's interest rates, and make those things cash flow under today's circumstances for at least 5 years. So the simple idea here is this: buy a property today at a discount, fix the debt for at least 5 years, make it cash flow today under today's circumstances at flat or slightly declining rents. Understand that that's the game. And if we can make it cash flow today, we will win in 5 years. Are you patient enough to wait those 5 years? That might be a question you need to ask yourself. Now comes a dilemma. On the flip side of all this opportunity that I see, on the flip side of all this optimism that I see, is the fact that it is very difficult today to get a deal done. Two major factors are causing that. Because of the uncertainty and because of the down cycle and because of the reduction in prices, because of these discounts, investor capital is slim. Investors are not looking to invest or deploy millions of dollars today. I've known this because I've found it increasingly difficult to raise capital in today's environment, where I began in 2022 with a $2.5 million capital raise, and then I struggled significantly on a $250,000 capital raise today. So this is what's happening. And perhaps I don't have the track record, the infrastructure, or the experience yet to ensure that I have the right amount of investors and the right type of investors to fill up all the deals that I could possibly buy today. Or perhaps it's just legitimate and it really is difficult to raise capital today. And after many conversations with people in my network, people in my ecosystem, people in my world that are actually operating deals and looking to buy deals, they're finding similar challenges. Challenge number one, as I just stated, is that raising capital is very difficult today. We saw the same things happen in 2009, 10, 11. Deals were out there. There were so many discounts to be had. It was an excellent buying opportunity, but it was difficult to buy because of the fact that capital was limited. You need dry powder today. I don't know where you're going to get it. Perhaps you can get it from a HELOC. Perhaps you can get it from friends, family, loved ones. Perhaps you can actually still raise capital. Perhaps you can go in with a bridge product. Perhaps you can figure out some sort of way to tap into your retirement account or a self-directed IRA, or maybe you have a whole life insurance policy where you could tap into some equity, or you have friends that are ready to go, or perhaps you don't. And that's one huge dilemma today for us investors that are looking to capitalize on today's opportunity. And then on the other side, we have debt. So it is challenging to get deals to pencil for banks. Banks are tightening up on their lending. Banks are not necessarily looking to fund everything today. They're going to be very strict with their criteria, and you really need to understand how they're going to be looking at deals. So to combat this, you need to talk to lenders frequently. You need to understand what they're looking at and how they're underwriting deals, and you need to build relationships with them if you haven't done so already. You need to start now building those relationships so that you can prove that you are someone worthy of lending to. So the two main obstacles that I see today are investor capital's dried up and lending is tight. Now to flip it back to the optimistic viewpoint of all of this, discounts are here, which means 5 years from now, we will capitalize on that. The other opportunistic thing that we need to focus on and think about is competition is also drying up. How do I know this? Very simple. Today, I have brokers calling me, whereas 5 years ago, when I was bidding on a property, I was competing against 20 or 30 other investment groups out there. And prices were being driven up because people were willing to pay more just to get a deal done. Not me, not my style. But today, brokers are calling me, essentially begging me to make an offer on an off-market portfolio, essentially begging me to make an offer for a call for offers that I'm seeing on Crexy. People are struggling to get offers today. I know this because I'm also looking to sell, and I'm not getting offers. It's a very challenging market. I believe that transactions are down significantly, but this is where the real investors take the opportunity to capitalize on the current environment. It is super important for us today, if we're looking to be active and we're looking to be in this for the long game, to capitalize on buying as many deals as we possibly can today, while keeping in mind that we need to make sure that they cash flow under today's circumstances with fixed rate debt for at least 5 years. That is the game plan. Now, all you have to do is figure out which bank is going to fund it for you and then how you're going to get the capital to fund the equity portion of it. Guys, today's your opportunity. Today is your chance. And if you are at all confused, need guidance, looking for some help or assistance, you need to join my multifamily machine. The multifamily machine is designed for two types of people. Number one, the beginner investor who has never invested in anything and looking to become a multifamily investor, looking to buy their own apartment buildings. And number two, somebody who's been in it for a while and needs a recharge and a refresh and a serious accountability group that they pay for to keep them accountable and join a group of people that are getting deals done today. If you want to find out more about the multifamily machine, go to my Stan store, stan.store/buy buildings, and check out the multifamily machine. This is the most affordable education out there. And today is the buying opportunity. Today, not tomorrow. Today is your chance to go buy an apartment building and actually see appreciation happen 5 years from now. And if you can't wait, maybe you should just be investing in something else, and that's okay. All right, my fam, that is it for today. I hope you find a deal. And if you need help or guidance, reach out to me. I will help you, or just join my cohort and I will guide you along the way. I give so many tips, advice, and guidance. I am here for you. This is why I exist. Have a great week, guys.